Welcome everyone. I'm going to do an early morning stock market technical analysis video. I'm going to get this one out relatively quickly. I just want to point out a couple key levels this morning. Everything, in the market, especially with technical analysis, is all about key levels. So when you hit certain levels, and you're able to take positions around those key levels, that helps mitigate your risk. And that's one of the key elements of my trading strategy and trading style is entry at key levels, and really just pivoting around key levels. So if you're interested in learning about technical analysis, how to use the charts to your advantage to kind of gain an edge on the market, then take my training course. Link is in the description below. Let's get started. All right, so we're going to start out with triple Qs. Basically, we're at the top of this range right here. You can see here this range. We've been trading at about 324.50. And we gapped up and we're right there at resistance. So two ways to play this. It is resistance, so it's likely the area where we'll be rejected. We do have this gap kind of hovering right here above, and gap fill would be at 330.50. So two ways to play it. Obviously, you could, exit longs. If you're long, you could exit longs here or short. If you're going to short trade this and just let that resistance level hold. Now, if the resistance level doesn't hold, then obviously you would probably want to stop out of your shorts and then potentially take a long. But the thing is that I think the top of this rally is likely going to end up there at 330.50 if it even gets up there. So there's a gap. Everybody's watching that gap. It's obvious. If we could make it look like we're going to fill the gap, but again, I think the upside's pretty limited from here. I see the potential upside as, about, we'll just call it 2%, give it a little bit to overshoot, but we'll say about a 2% upside. Obviously, there could always be more. I'm just going against the technicals, and this gap fill would be, kind of an area of resistance where people would, sell into this thing. So 2% upside, and then on the downside, I really think that the next leg down is in the cards, and that would put us down at this 280. Now it's sitting at about 287. All right, so the risk reward for me to go long here doesn't make sense. If you're long, you could just stay long, and and if we get the gap fill, that might be an area where you'd want to take profit. But again, watch this level because we are at resistance and it's likely going to get rejected here. So that's just an area to watch. 324, 324.50 right here where we're at right now is a key level. All right. Risk reward though, to go long is not very favorable because the downside is potentially down at about, we'll call it 11%. So you've got a 2% upside and 11% downside. That's better than a 5-to-1 risk ratio, and so not very favorable to go long. The short trade looks like there's more opportunity. Now, of course, we could break above 330 and just continue to run. That's always possible. SPY. All right, so SPY running right into major resistance on this blue trend line. This blue trend line here, if you go back, and I show it in a lot of my videos, but here's the weekly chart, and this is going all the way back to 2009. This is your bull market in SPY. This trend, this bullish trend is the blue line. So you can see we held that bullish trend here in 2016, held it again, held support all through here. Broke bullish trend in 2018, and we've been back testing from underneath ever since. So there's a back test. That was an objective area to get short, and if you did that, you would have caught the big COVID crash. And now you can see where we're trading into is basically right there at resistance again. So moving into the hourly, we're running right into that key resistance level. We are making a new all-time high, it looks like. Yep, new all-time high. And if you look at the daily, this new all-time high that we're making in the S&P 500 is a divergent high. So as I zoom out, you see the negative divergence. See how momentum just continues to drop off. Momentum is moving down, and yet we're making a slightly new high. So this is a divergent high, high probability that it fails, in this area basically. Elevated probability that it's going to fail. And if it does, then I suspect we're going to run down. Again, I still am looking for the bottom of this this trend line down here, which is coming off of these lows right here. We've got a couple reactions, 1, 2, 3, 4. So I'm looking for a move down to 365, somewhere right in that area. All right, so this is an objective area to short the SPY as well. Doesn't mean it's going to work, but it's objective. So again, you just take the trades as as they're given to you, and then manage them accordingly. And if something changes technically, then you have to change your trade as well. IWM on the hourly chart here. So we're looking at the small caps. Looks like it's running up to gap fill up here at 225. We got a slight gap here on the hourly chart. Looks like we're going to run up and fill that gap. That's likely going to be your area of resistance. If you look at the daily here, there's your gap right there on the daily as well. So a small gap. I think we run up, fill that. We could pop it a little bit. Anytime you have a gap, you could run up and pop it just a little bit. You want to give it a little bit of room. But I think that's likely going to be proven to be the area of resistance and where we'll start to roll over and make the next leg lower. There's always the possibility to run up and make a new marginal high as well up here. If it does that anytime soon, that high would be a divergent high. So, again, we just watch the levels and watch what the price does around those levels to give us an indication of where things might go in the future. Though one of the reasons why I think we're going to go lower, though, is if you look at the IWM, we had negative divergence. This circled area was your first divergent high, and I think it's likely that that's what started the downtrend. So we made the first leg down, we have a kickback rally, and then we continue down, and trend down, basically. Okay, I'll just go into some of my best of breed stock trading ideas I've been pointing out and just really show you guys what I really like. So gold still looks good. We have bullish divergence now in gold, rallying today. Nothing substantial. We haven't changed the technical downtrend yet of this. We've been in a downtrend in gold since really going back here in August of 2020. This was, the area that I exited gold mining. And then, and I'm looking to, and I've been recycling back into those miners now. So just when everybody's talking bullish or bearish on gold, you can hear it across CNBC and how everybody thinks gold's dead, and that's fine, But again, back here everybody was bullish, and back down here everybody's bearish. It's very common. So ultimately, you don't always want to do the opposite, but very often you want to do the opposite of what the crowd's doing. But not just for the sake of going opposite. You want to wait for the technicals to set up, and they are set up right now. We have bullish divergence. See how we're moving higher in the RSI and the PPO. We made a slightly equal low basically the other day, and now we're running higher. So I'm bullish on gold. And I've got some miners that are interesting. The one miner I really want to point out just for this video is this HMY. So I talked about this looking like it was going to break out, and we do have a breakout today. It's up 9%. So here's the downtrend line on HMY, and it looked really good to me because basically we had this support zone right here, and we dipped below into this support zone. When we did that, we put in bullish divergence. So I circled that back then, and then we recovered that support zone, ran up to resistance, bounced, held, bounced all the way back down to the bottom of that, or the top of that support zone, and then from there it held. And when that held, that showed me that it started to trend higher. All right, we're making higher lows. So you have a low, you have a higher low. Now you have a higher high with today's breakout. So today's starting a new uptrend, at least by definition, of higher lows and higher highs. And we also just broke this downtrend line here on the daily. So I suspect we're running right up to the 200-day, probably get checked there, get some sort of a reaction there, maybe even a back test of the trend line. But again, this to me looks, if I roll out, it looks like we're starting the next uptrend in HMY. So I like it. I'm long this thing. I've been long since we put in this bullish divergence down in this buy zone. I've been talking about this one for a while. If you bought down here at the bottom of the buy zone where I was talking about it, this thing's up already 25%. And I think there's a lot, it's just getting started from my perspective. And then wheat and precious metals looks very similar to the same setup. You have a dip below, put in bullish divergence down here, recover that broken support line, which was sitting at about 37.20, recover, and then come back in, test it, and hold, and start to move higher. So we're putting in a series of higher lows. We don't have the higher high yet, and we have this downtrend line up here. So I suspect we're running up to that. I suspect we're going to run up to that downtrend line. Whether we break it this time or not, I'm not sure. But to me, it looks like we're going to break to the upside eventually. And so I like this one. Let's take a look at AMD, just moving off the gold miners because I put out a video on those yesterday. Here's AMD right at the 200-day moving average on the daily. So far getting checked and not able to break out. So I suspect that holds as the resistance line, and we continue to kind of trend down. If you look here, you have a high, kind of lower highs, and if you any higher and you're going to kind of break that downtrend, the big picture on this one, you got to let it just play out. But you've got this big uptrend line here on the daily. This goes all the way back to 2016. We put in negative divergence just recently. That was your divergent high. So there's your negative divergence. See how we're just dropping off, just trending down. All right. We broke trend. There's your break of trend. You do a back test, and we're just kind of consolidating below trend. So I think that, I still like this one to the downside. I'm looking for, this 59 price target. But, AMD is likely going to do what the triple Qs does. So you can watch that. That can help you. Because there is always the possibility to run up and do another back test of this trend line. If I extend that out, we could run up and tag it again. Couple other interesting ones. You can see Peloton ran right up to resistance right there at 118.60. That held as resistance before. It was also support really back in here. So we're just hitting that resistance. We fail. Try make an attempt, fail. Make an attempt. So far, failing. And until that breaks, that should hold as resistance. So just a level to watch there. All right. So I didn't put this in the video, but I did leave a comment yesterday that I shorted Chewy on a back test of resistance. So that's one of the reasons why if you're following a trade and you've got the trend lines up. And you've taken my course and you understand how to trade these things, then you'll be able to take action on these without me telling you in a video. One thing about Chewy, you have this uptrend line right here in the daily, and you can see that's just a nice clean uptrend line here. I can get rid of this one up here. Don't need that anymore. Uptrend line there, and we put in negative divergence right there. So this was basically divergent high price action. You then look for a break of trend, which you got. All right, there's your break of trend right there. Back test, and yesterday maybe it was earnings or something, but this thing opened up 15% up. And I noticed when they opened it, they opened it right here, and it basically failed, and it basically got rejected right back below that resistance line. That's my tell. That was I talked about this one, I think, in the past, but that was basically your tell that gap it up and sell it down. It's a sell the rip stock. At least yesterday it was. It ripped higher on the open, and they sold it down as soon as it opened. And so to me, that looks like we're holding that resistance level and going lower. So I shorted it basically at that trend line, and it's continuing down today. You can see out a lot of these tech stocks, Chewy's weak. So that is just technical analysis, working in our favor. And I suspect we're going to come down to the 200-day moving average. All right, that's down there at 73.30. From there, that's a drop of about another 13% or so. We'll probably get a reaction there, but I think this thing's likely going to go lower beyond that. Okay, and then Snap. Snap is doing that test of resistance that I talked about. So what I did the other day is covered my Snap here at support, 48.14-ish, right in there. And then I was looking for probably a test of this next resistance level, which is about 54. I have it at 54.85. If you zoom into the hourly, looks like the seller stepped in just a little bit shy of that level at 54.75. So that's bearish. That the sellers were waiting up there, waiting to get short. I am short again this thing. I've reshorted it, and looking for this to continue back down to the support line of 48, and ultimately I'm looking for a break of that support line. We've got this big gap here, from way back in October of 2020 down at 29. I think we are headed towards that gap fill. I don't know if we'll get the gap fill, but it's possible. You get down in that area, we'll probably, fill the gap. But I think it's likely we're headed in the direction of that gap fill. We have the 200-day. If I go to the daily, there's your 200 days sitting at about 39.40 right now. So we'll likely, what I see happening is we run down to this 48.40, very muted reaction, but we're going to break that, head right down to the 200-day, probably get a bounce there, but then ultimately over time break down towards this gap. All right, so that would be the target. Enter into this gap level is where I'd be looking to take profit. Okay, that's all I got for this morning. So I'm going to get the video out, and good luck, everyone. Leave me a thumbs up on your way out. Catch you guys on the next one.